Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. This is an interesting and informational video talking about the things they don't tell you about silver declines. It's very interesting. I definitely think you guys will enjoy it. I wanted to share this with you because there's a lot of information that's shown in this, a lot of detailed statistics going into some of the downfalls, some of the downtrends, the corrections, and so on and so forth that goes into precious metals, and it's extremely important to understand this. So before we start, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. So what they don't tell you about silver declines: even though the beginning of yesterday's session was rather uneventful, it remains hours prove much more informative and meaningful. In fact, based on how the developments unfolded, we decided to go long silver. This position is against the big downtrend, which continues to be most likely the outcome due to the myriads of reasons outlined in the week's flagship gold trading alert. Yet, just because gold, silver, and mining stocks are likely to fall very far in the following months, it doesn't mean that there will be no periodic corrections, that some of them will be likely enough to provide good risk-reward situations that could justify going long. It seems that we have one such situation right now. So they're saying that even though prices are down, it doesn't necessarily mean that things are bad or in a bad shape. This actually could be some opportunity for some people, a good risk-reward situation like they mentioned. But anyways, it goes on to say, we've been writing for a few days now that the short-term outlook for gold and silver and mining stocks is now rather bullish, even though the medium-term outlook continues to be extremely bearish. We wrote, however, that the situation was not bullish enough to justify long positions. So what happened that the outlook for silver became bullish enough to justify opening the long position in it? And why not gold and mining stocks as well? It's a matter of what happened during Tuesday's session, and more precisely, how it happened. How silver performed relative to gold, and more importantly, relative to mining stocks, and the latter showed strength. So, before I keep going, I want to talk about stocks and mining stocks, and a lot of people ask me about it. So you can use this as a highly opportunistic advantage if you know what you're doing. Just like with any investment, if you're educated enough and experienced enough to do that, then do it. Diversification is key, and it can be very, very beneficial in your journey, and you can capitalize off of a lot of profits from it. But if you're new into it, just be careful. Don't invest only invest as much as you're willing to lose. And just like for instance, when I got into cryptocurrency, I did not take any money out of my own pocket when I first started, because I didn't know what I was doing. Just like when I got into stock markets, I only bought the big Amazon, Apple type stocks, because those were the ones I knew would do good, and they were more of a long-term situation I was putting myself in. If you're trying to get into marginal trading and all this day trading stuff, be careful and just understand how the markets work before you do it. That's all I'm going to say on that. So anyways, here's a chart. We can see how it says gold is reversed, and we're seeing that the strength can be falling or supporting gold and silver at certain times. It goes on to say, on September 19th, silver declined while miners moved higher, just like yesterday. The gold stocks once again showed daily strength. What seems surprising is that it was silver's weakness that actually increased its bullish potential. People tend to view rallies as bullish and declines as bearish, as if seeing something once made it more likely happen on the next day too. But it isn't so, that's so true. I'm really glad they put that in there. If it were, it would be possible for everyone to make money simply by going long after a daily rally and going short after a daily decline. And yet, people are not doing it. Why? Because it doesn't generate returns on average. Because this simple strategy doesn't work. Why again? Because daily rallies are not bullish by themselves, just as daily declines are not bearish on their own. Very good point. In fact, the opposite might be true to some very limited extent. After all, a decline needs to take place before the bottom, and everyone knows that it's best to buy at the bottom. It's also best to sell something when it tops and to enter short positions at the time, and a rally must first take place to top a form, for a form to top. And that's true. I mean, the bottoms are, buy low, sell high. Most people end up buying high and selling low from that manipulation, that anticipation in the markets, and the emotional attachment they have. So in fact, the opposite might be true to some very limited extent. After all, a decline needs to take place before the bottom. So I just read that. So most daily rallies and most daily declines, however, don't result in tops or bottoms. They are followed by some other price action. Therefore, in most cases, a daily rally or a daily decline doesn't tell us anything about the way the price will move in the following days. But while the price move itself doesn't tell us much, the same price move in context can tell us a lot. The context can be provided by news, by previous price moves in the same asset, or price moves of related assets, saying gold moving higher could influence silver prices over the next couple of days. So, in case of news, we detected anomalies and determined whether the market's reacting the way it should. If not, this might create a trading opportunity. In case of those previous price moves, we can apply the classic technical analysis patterns, the cyclical analysis, and similar techniques. See, the latest case can provide sector-specific insights, and some things might happen on a special way that doesn't take place in general, and thus is not covered by the classic technical rules. By the way, did you know that technical rules are justified from the fundamental point of view? We saw this as a kind of signal yesterday. Namely, mining stocks showed daily strength by soaring back to previous highs, while gold did almost nothing close to price terms, and silver actually declined. Overall, silver is close to its recent lows, while gold miners are close to their very recent highs. We've researched in the relative performance of silver mining stocks, and to make story short, in case of trading tips, miners tend to rally particularly strongly in the early part of a given rally, and silver tends to be relatively weak initially but soars in the final part of the rally. I mean, silver is much more volatile than gold is. There's a lot more opportunity in silver when there's higher highs and lower lows, to put it in better words. Yesterday's session, combined with relative performance of silver miners that saw recently, perfectly fits the early part of the rally situation as outlined above. That's exactly what miners in silver are supposed to do before the final part of the rally takes place. There's also a confirmation of the above present in mining stocks themselves. In this case, it's the second way the context plays an important role. The green areas marked on the above chart show similar cases in mining stocks. Gold miners declined significantly at the beginning of the year, but they corrected with short-term strength. On Monday, we wrote that Friday's decline might have indicated that we just saw another short-term top, or it might be a regular daily pause that we often see in the initial part of the short-term upswings. Based on how miners rallied yesterday, it seems more likely that it was just a pause. See, consequently, the situation is similar to what happened in the mid-September 2019, mid-October highs. That was when we saw silver, up at that range again. So the similarity to 2019 is the key one, though. That was corrective upswing after a big, sharp short-term decline, and this is kind of the decline we saw earlier this month. Silver's performance is also quite similar. On September 19th, gold miners rallied strongly after the daily slide, while silver was unable to close above the previous day's closing price. This means two things. We are correct to close short positions in the precious metal sector immediately after gold's January 14th reversal, and that is silver is likely to enter its big catch-up stage shortly. So it's setting up for a rally. We've seen when stock markets were setting record-breaking highs, silver didn't drop too much when it normally would have. If the dollar index is very high, silver still holds its ground, and they're saying that it's going to be building up, and a short-term big catch-up, or quote-unquote big catch-up stage, could be happening shortly. So it's interesting. Summing it, I'm gonna go into the sum up because there's a lot. So this is kind of just what's going on. So summing it up, it seems that the final part of the corrective upswing in the precious metals market is still ahead of us. This means that silver is likely to rally particularly strong in the next several days. The risk to reward ratio in case of silver outperforms to the risk of reward ratio of other precious metal sectors. Similarly, how long stock picks from the previous weeks outperformed the S&P over 3 times. So consequently, at this time, we aim to profit on a quick, long trade in silver, and it might be something you might want to consider as well. So a very good article. There's a lot of stuff. So if you were kind of lost in this, I hope you were able to understand the whole point of this. And there's a lot of information that even downsides can show us about where it's headed on the upside. Just like I mentioned, when stocks were setting record-breaking highs, even though silver was down, it still showed that there was a lot of stability and there's a lot of support being built at that low. So when it does reach that, we know that there could be a rally happening. And that's kind of what this was saying, is there's definitely a big catch-up that could be happening. Anytime you want to see what silver's doing, look what gold's doing, and silver's going to follow suit a couple weeks or a couple months afterwards. And if gold's rising upwards and silver hasn't yet, that means that silver more than likely is going to catch up to gold, the big catch up. Especially looking at the gold to silver ratio, you can use other ways to look at this as well. But anyways, I'm going to wrap this video up here. I hope you guys did enjoy it. If you did, make sure to smash the like button. Also, make sure you subscribe if you're new. Hopefully, I'll be on my main channel soon after the internal team switches it over to my new brand account. So thank you guys so much for tuning in. Make sure to smash the like button. This was Silver Slayer. I'll see you guys soon. Peace.